Welcome back to A to Z Equities, where we cover all US listed stocks from A to Z. Today, we're covering a very special company, the largest company in the world by market cap, Apple Inc., ticker AAPL. The stock was recently in the news because Berkshire Hathaway, Warren Buffett's investing firm, reduced its stake in Apple by 50% pretty much overnight, which could indicate that Buffett thinks that Apple is either overvalued or maybe not as undervalued as it used to be. In any event, we're going to be going through Apple, rating it in 5 different categories. So we're going to be rating Apple from 1 to 5 stars on industry, price, growth, financial position, and management. And at the conclusion of the video, we'll be giving Apple a total blended score from 1 to 5 stars based on the average of its scores in those 5 categories. So without further ado, let's get into it, starting with industry. Now, we see here on Apple's investor relations page that there's not too much information provided on what the company does. And that is probably because everyone already knows what Apple does. And if you're not familiar with this company, then you're probably living under a rock. That said, let's go over to Wikipedia just to get an official picture or unofficial picture on what this company does. Apple is an American hardware and software developer and a technology company that develops and sells computers, smartphones, consumer electronics, as well as operating systems and application software. Apple also operates an internet sales portal for music, films, and software. Apple's headquarters are located in Cupertino, California. So, obviously, Apple's a huge company, a giant in hardware and software. They sell smartphones, tablets, computers. They sell various software programs that compete with Android, with Microsoft. Their hardware competes with Samsung, Huawei, many other companies. Apple is a market giant, a dominant company that's created its own network effects, its own ecosystems of products and software that are very sticky, that once a consumer gets into Apple's ecosystem, they don't get out too easily. And if a consumer buys one Apple product, then they're likely to buy a lot more. Once someone's in the Apple ecosystem, they tend to stay there. Apple has really built, I would say, its own industry. Apple has created its own ecosystem of products and services and caters to many, many hundreds of millions of people in the US and throughout the world. And so, if there's any company in the world that's going to get a good score for industry, it's going to be Apple. Apple doesn't just operate in great growth industries, but Apple has risen to the top and actually created its own ecosystem within these exceptional industries to operate in. So we're going to give Apple 5 stars for industry. Moving on to price, we're going to check out Apple's financials to see how this company is priced relative to its earnings and its other fundamentals. So, first of all, as always, we need to get a picture of how much does this company sell for. We see this company sells for an astonishing $3.34 trillion dollars of market value. Again, this is the largest company in the world by market cap at the moment and is likely to stay up there for the foreseeable future. Now, moving over to the financials, let's get a picture of how Apple's price compares to its results. So we see here that in the trailing 12-month period, the last 12 months that have been reported, Apple has done 385.6 billion in revenues. So let's move over to the calculator here to get Apple's price to sales ratio. Again, the price is $3.34 trillion dollars. We're going to divide that by, again, what are the sales? 385.6. So there we go. 3.34 trillion divided by 0.3856 trillion, which is 385 billion, 600 million. And we get a price to sales ratio that's pretty pricey at 8.66. So that's a pretty high price to sales ratio. Apple is a premium company, so it is going to command a premium valuation. Let's check out how Apple's price compares to its earnings. So we see here that net income is 101.96. We can round this off to 102 billion. So we're going to divide 3.34 trillion by 102 billion, and we get a price to earnings ratio of 32.7. That's somewhat above the market average, somewhat above the current average for the S&P 500. Not a wild or ridiculous price to earnings ratio, but definitely up there in the upper levels of price to earnings ratios. So we have a very high price to sales ratio, a moderately high price to earnings ratio. And now let's check out how Apple's price compares to its free cash flows. So scrolling down to the free cash flow, levered free cash flow for the trailing 12 months is $86.2 billion. So we're going to go back to our calculator. Again, the price is 3.34 trillion. That's the market cap of the company. We're going to divide that by $86.2 billion, and we get a price to free cash flow ratio of 38.7. That's pretty elevated. Again, not out of control. 38.7. It's not a ridiculous price to free cash flow ratio. But on the price front, Apple is looking kind of expensive so far. We had a really high price to sales ratio, a relatively high price to earnings ratio, a relatively high price to free cash flow ratio. Again, price doesn't look out of control. This company is very profitable, but the price is elevated even relative to those substantial profits. And now, lastly, let's take a look and see what Apple's book value looks like and how that compares to its price. So, the book value, as we've discussed in the past, is the assets of the company minus its liabilities. The tangible book value of the company is the tangible assets of the company as opposed to goodwill and other intangibles. The tangible assets of the company minus liabilities is tangible book value. We see here that Apple has about 25 billion in cash, more in short-term investments, so about 61.8 billion in cash and short-term investments on the balance sheet. But just scrolling down to total assets, we see this company has $331.6 billion of total assets. Total liabilities are 264.9 billion. Total equity 66.7 billion. So compared to the market cap, I can already tell you that is not gonna do so well. That's going to be a very high price to book value ratio. The book value is basically nothing compared to the market cap. So again, the market cap is 3.34 trillion. Equity is 66.7 billion, if I recall correctly. And we have a price to book value of 50, which essentially means that the book value is nothing. It doesn't really come into play here. Now, for most companies, having a book value of 66.7 billion would play into the investment analysis very, very much. But for a company that's the biggest company in the world, trading at $3.34 trillion of market value, this 66.7 billion is only 1/50th of that, 2% of that market cap, yielding a price to book value ratio of 50. That's not really going to factor into the analysis. We see that all of Apple's value is tangible. So the price to tangible book value is also going to be 50. But again, that doesn't really factor in here because, again, it's good. It's always good if a company has positive book value, positive tangible book value. A lot of companies don't. So it's good that they do. But on the other hand, it's not something which is going to weigh in their favor in a significant way because there's no safety net, right? One thing that we would like to see when it comes to book value and tangible book value is we'd like to see a safety net where a significant part of the market cap is already comprised of book value, tangible book value that's already accrued to shareholders and sitting on the balance sheet. In this case, there's no such safety net because the book value and tangible book value that's accrued to shareholders is only about 2% of the market cap, the price that investors have to pay to purchase shares of the company. Now, all of that said, let's give Apple 2.5 stars for value. The price to sales ratio is very high. The price to earnings ratio is moderately high. Price to free cash flow ratio, moderately high. Price to book value, price to tangible book value, not really going to weigh in either direction. Those are pretty middle of the road because the fact that it's positive is good, better than a negative book value. But on the other hand, again, it doesn't really offer that margin of safety on the price front. So Apple is going to get 2.5 stars for price. Now, moving on to growth. So we're going to look at a few different metrics for growth, and the metrics are pretty similar to what we've already been looking at in terms of the income statement, cash flows. We want to see how these results have changed from year to year. And so going back in time to the fiscal year ended September 2016, Apple did 215 billion in revenue. That grew to 229, 265, dropped to 260 in 2019. In 2020, it rose to 274, 365, 394 in 2022. That's been the peak. 2023 actually saw a revenue decline for Apple. And it looks like now in 2024, they're getting back on that growth track, but the growth has definitely slowed. And this is actually a little bit surprising to me because I would think that Apple is growing a little bit faster than this. We see that growth has been significant. You have over the last decade approximately a doubling of revenue. Um, Certainly a doubling of revenue since 2014, where it was 182, 183 million. Now it's more than double that, but that's a high single digit growth rate, not bad, but that has slowed and actually dipped last year. So the growth doesn't look so good here on the top line for Apple. Let's see if it looks any better on the bottom line. So we see here that net income was 45.6, 45.7 billion in the fiscal year 2016. It rose um, somewhat and then dipped, and 57.4 billion in 2020, and then it really jumped, right? So 2021 almost double, rose further in 2022, dips a tiny bit in 2023, and now it's back on the growth track in 2024. So this net income definitely looks significantly better, I would say, in terms of growth than the revenue does, but also not so consistent. The last couple of years, that growth has definitely slowed down. But the fact that this big jump from 2020 to 2021 has been sustainable, that almost doubling of net income in a single year, but then it's actually been sustainable because the income has actually grown a little bit since then, is a good sign and is going to help out Apple when it comes to growth. Now, let's take a look at Apple's free cash flows and see how those are doing, whether those are growing. And we see pretty good growth here over time. 44 billion going back to 2016, so almost a decade. We were at 44 billion. A little bit of a dip in 2017, but then back on the growth track. Another little dip, growing. 2023 was a little bit of a dip. 2024 getting back on the growth track. So this looks pretty good. We're not judging Apple on a curve, right? We judge all companies in each metric the same, right? So when we're looking at price, we're not considering other factors. We're not considering industry, right? We're not considering growth. When we look at growth, we're not considering industry or price. So as much as the revenue and even some of these other figures, it surprises me because I would expect to see Apple growing a little bit faster. Nonetheless, these numbers do look good on their face, right? If we were looking at any other company that we never heard of before, and that we don't know anything about, and we're looking at these numbers, we'd be saying, these numbers are pretty good, right? Of course, not a clear trajectory of year after year after year, these numbers going up, but over time, a clear trajectory, a very solid growth. Again, high single digit revenue growth. It slowed down a little bit in the last couple of years, so recency bias is going to affect that score a little bit, but net income marching up over time, free cash flows marching up over time. And yes, the fact there was a dip last year doesn't play in their favor, but the long term trend is definitely quite favorable. Now, lastly, we're going to look at analyst estimates. and see how analysts are forecasting this company's growth to go. And so 2024, we see earnings growth estimated at close to 10%, over 10% next year. 2026, 12.48%. And then we see a couple of forecasts for 2027, 2028, which are even higher growth, but we're going to dismiss those because those are only coming from one analyst each, as opposed to these, which are coming from 20 to 43 analysts for 2024 through 2026. Now, let's see about revenue. Analysts expecting very low revenue growth this year, but expecting that to jump back into the high single digits next year and 2026. So that looks pretty good. For growth, we're going to give Apple 3.5 stars. The growth has been solid, but not remarkable over time. And the analyst forecast for the next couple of years also call for solid, but not remarkable growth. So we're going to give Apple a slightly above average score here of 3.5 stars for growth. Now, let's take a look at Apple's financial position. As we saw, Apple has over 61, close to $62 billion in cash and short term investments. Total current assets are 125.4 billion. Current liabilities are 131.6 billion. So this company actually has current liabilities slightly higher than their current assets, and that is kind of shocking. That it looks like has been more or less the norm, that current liabilities are at least very close to current assets, if not higher over time. And just looking at past years, it looks like that's been the norm. And I don't think that Apple is is going bankrupt, but it's just very surprising to see that current assets are lower lower here than the current liabilities. So that is not gonna help Apple's score on financial position. Long-term debt is 86.1 billion. It's actually down from past years, and it's pretty negligible compared to the company's earnings. Right, long-term debt is less than a single year of this company's earnings, as well as its market cap. This is really just a tiny little fraction. So that is not going to really hurt Apple. The fact that they have a little bit of long-term debt, the debt outlook, the debt picture looks pretty good. In terms of interest expense, let's go back to the income statement before we give a final score here. For financial position, interest expense is close to $4 billion annually. It's gone up as interest rates have risen, and but that's really, if you look at what this company is earning, its net income 102 billion. 4 billion of interest expense, that's a drop in the bucket. So I would say, as much as 4 billion of interest expense sounds like a lot and would be a lot for almost any other company, it's really not much for Apple based on its earnings. So, all of that said, for financial position, we have a poor ratio of current assets to current liabilities. Long term debt, very manageable, very low relatively compared to Apple's earnings power. We have debt to earnings, again, pretty low compared to what Apple can make even in a single year. So its long term debt, total long term debt, is less than its annual earnings. That's a very low ratio of debt to earnings. And then the interest coverage is very easy here with annual net income still over 25 times its interest expense, even in a higher interest rate environment with an interest expense that's risen significantly. Now, if I was Apple, I would probably try to take some cash, pay off debt. We've seen their debt got paid down a little bit, and maybe that's why their current ratio is not looking so good. But as Apple continues to earn cash, we saw they can pay off their debt within a single year from their profit. So I would suggest maybe doing that, because a company like this doesn't need to be paying any interest. So, with that said, for financial position, we're going to give Apple 3.5 stars. The current ratio weighs against them, but everything else looks good, slightly above average balance sheet. So, we're going to give Apple 3.5 stars for financial position. Now, lastly, turning to management. And now I feel woefully inadequate in terms of my ability to rate Apple's management. Obviously, this is a team with This is a company with a stellar management team historically, and that's put up amazing performance in terms of growing this company into one of the largest companies in the world, the largest by market cap. And so for me to give their management team a rating really feels inadequate, and like I am not equipped or qualified to do that. That said, as always, we're just going to stick to the objective metrics that we look at, a few metrics that help us weigh this management team without resorting to their resumes and what their degrees are and what their qualifications are. We're just going to stick to a few objective metrics, take a look at what this management team is doing in a few different categories. So firstly, looking at the earnings surprise record, how has this company performed relative to analyst expectations? We see it's performed phenomenally, phenomenally. In the last 2 years, earnings beat 8 times out of 8, revenue beat 6 times out of 8. So we see that this company is beating expectations, and that is a good sign that this management team is both communicating um, reasonable expectations to the market and then actually coming in and beating those expectations. That's a good sign of a solid management team. Now, let's take a look at insider transactions. We see that in the last 12 months per bar chart, if we could just get rid of this pop up, but we see there have been 1.1 million shares sold, 1,153,000 versus 0 shares bought. Apple's share price is $209. So we have, if we multiply that by 1 million, we have a little over 200 million, somewhere between 200 and 250 million in share sales in the last 12 months. That's not too bad for a company of Apple's size. We're talking about a company that's, where insiders hold billions and billions and billions of dollars of shares. The fact that they've sold a little over 200 million in the last 12 months, I can't relate to having a need for that much money, but to fund the lifestyles of some of these Apple insiders, who many of whom are billionaires, freeing up collectively 200 million in assets by selling some stock in the last year seems like a pretty reasonable number. Obviously, we'd prefer to see them buying shares on the open market, and maybe the fact that they're not indicates they don't think it's undervalued. But on the whole, this number is not so bad. A higher number would be greater cause for alarm. The fact that they've sold 1 million shares in the past year is not really cause for concern. Now, lastly, let's take a look at what this company's share count is doing. And it's actually well known that Apple is a repurchaser of its own shares. But let's see what that share count looks like from year to year. And we see here that there is a steady pace of decline. Wow, really, really good pace of decline. Going back to 2016, there were 22 billion shares of this company outstanding. I mean, I think there's been a stock split in there. So, but this is on an adjusted basis. Post stock split, 22 billion shares of this company, and we see that number just going down drastically from year to year: 21, 20, 18.5, 17.5, 16.8, 16.3, 15.8, 15.5. So that share reduction rate has slowed probably as the stock price has risen, and the buyback dollars don't go as far. But that said, very, very strong record of reducing the share count here. And then let's look at stock-based compensation. Is this company paying its insiders by issuing new shares? We see there is some 11.4 billion in the trailing 12-month period, and that's been going up over time. Also, probably as the share price has risen. So there is some stock-based compensation here, but it's really negligible compared to the market cap. Again, we have a $3 trillion plus market cap. So this is about zero point 0.3, zero point 0.4 of 1% of new shares being issued on an annual basis to insiders. So not too bad. Now, again, on earnings surprise numbers, this company has done really well, hit it out of the park. On insider transactions, pretty middle of the road record. On share count reduction, phenomenal, phenomenal record of reducing the share count, increasing the ownership interest of shareholders over time. And here, stock based compensation, obviously 11.4 would again sound like a big number for any company other than Apple. This is actually a very small number, well under 1% increase in shares to based on compensation to insiders annually. So, with all of that said, this management team looks really good. We're going to give Apple a 4.5-star rating for management. So to recap, Apple got a 5 for industry, a 2.5 for price, a 3.5-star rating for growth, 3.5 stars for financial position, and 4.5 stars for management. We have very solid scores here, all of them above average except for price, which again looks a little bit pricey based on a high price to sales ratio and elevated price to earnings and price to free cash flow ratios. All of that said, the average score in these five categories is 3.8 stars. Apple coming away with a 3.8-star rating, a new high in our rating system, higher than any other company we've looked at. And that's pretty fitting for the biggest and one of the most successful companies in the world, a company that, again, the industry category was created for this company. 5-star ratings for industry were created for a company like Apple. And so, overall, 3.8-star rating for Apple. This is not financial advice, not making a buy or sell recommendation for Apple. That said, if this analysis sounds compelling to you and you see how we got here to 3.8 stars for this company, it may bear looking into on your own, doing some research to see if this stock may be a good buy, but certainly not recommending it as a buy or a sell, not giving financial advice. I personally do not have any position in Apple, long or short. Thank you so much for tuning in to A to Z Equities. Feel free to leave a like or subscribe if you enjoyed the content. If you'd like to see more of this content in the future as we go through US listed stocks from A to Z. With that said, hoping to see you back on another video very soon.